What EXIM has given us is confidence in exporting, and that makes a big difference. We are not afraid anymore.
That insurance is the thing that makes us able to reach out to so many places and to deliver so much product.
Partnering with EXIM for international business is a game changer for us. It's that simple. It's a game changer.
If you're a new customer to EXIM Bank, or if you've never tried them, you need to try it.
For us, without EXIM Bank, I'm not sure that I'd be standing here right now. It has really opened up the world for us.
The EXIM Bank is able to give us a peace of mind for about a third of our sales, and that's huge for us.
EXIM Bank has been an invaluable tool to SMEs. Without EXIM Bank, we wouldn't be able to grow our business, increase our sales, and increase our company.
Welcome to EXIM's 2021 Virtual Annual Conference. We're glad you're attending. The past year has been a turbulent one as we experienced significant challenges in our daily lives. The pandemic had an enormous impact on businesses, particularly small businesses. But through it all, Americans and our companies rallied, whether it was pivoting from manufacturing machinery to making masks, distilled spirits to disinfectants, raising money for local food banks, or providing on-site schooling for employees' children. We came together to rebuild our communities and prepare for the future. At EXIM, our goal during this difficult time was to continue fulfilling our mission of supporting U.S.-based jobs by facilitating the export of U.S.-made goods and services. We're about to begin the part of our conference program that focuses on helping small businesses succeed. Before Alabamians gave me the honor of serving in the House of Representatives over 28 years ago, I co-owned a small manufacturing company. As a former small business owner myself, I can relate to the many opportunities and challenges that face small businesses every day. EXIM's mission is to support American jobs by facilitating the export of American-made goods and services. Since it was established 86 years ago, at a time of great economic challenge for our nation, EXIM has been involved in projects that have transformed communities around the world. The Pan American Highway in Latin America, by managing the Marshall Plan, which rebuilt Europe after World War II. And now we're supporting launches into space. My nomination by the President and my appointment by the Senate designated me as Small Business Advocate. Since my appointment to the Board of Directors, I've worked closely with EXIM's very capable Office of Small Business under the leadership of Jim Burrows. Prior to the pandemic, team members and I have had the pleasure of visiting hundreds of small business exporters. While each of them has a unique story, there are a few things they have in common. Many of them started exporting as a result of an unsolicited international order. Most of them now consider exporting a key success factor for their company. And third, they all agree that EXIM is an important component of their successful export strategy. What you're going to be hearing in the following sessions will tell you how EXIM can assist you in establishing, sustaining, and growing your export business. What better way to do so than by hearing from your peers, small business owners who have successfully embraced exporting as a strategic initiative. They will talk with you about the opportunities, challenges, lessons learned, and the financial impact exporting has had on their companies. International trade is important to businesses of all sizes, particularly small and medium-sized companies. Small businesses that have yet to look abroad may find the thought of exporting especially challenging. Is my business too small? What if a foreign customer can't or won't pay? As you consider exporting, here are a few facts to bear in mind. 95% of the world's purchasing power resides outside the United States. Businesses that export are more profitable than those that don't. And XM does business with companies of all sizes. No company and no deal is too small. How does XM help small businesses seeking foreign customers? XM offers export credit insurance to help shield U.S. exporters from the risk of non-payment by those outside the country. XM's working capital guarantees give private sector lenders the assurance they need to provide financing to U.S. businesses looking to fill export orders. And XM offers guarantees of commercial loans to foreign buyers of U.S. capital equipment. XM's experienced professionals understand that every small firm has its own special needs and its own specific aspirations for the future. They're ready to listen to you and to discuss with you which of these solutions or others are the right fit for your business. I invite you to reach out to them or to me, and let's talk about how we can help. Let me speak for all of us at XM in saying we hope you enjoy the rest of the conference. We sincerely hope you learn new and valuable ways to achieve new heights of success for you, your employees, and your customers. Now let's hear from your fellow small business colleagues. Thank you.
Hello, and welcome to today's Small Business Breakout Session, XM 101. My name is Eugene Business Development Specialist at XM, and I will be your moderator for today's session. We have a very comprehensive presentation today, and before I introduce our presenter, I'd like to encourage everyone to submit any questions you may have. We will try to address them all at the end of the presentation. It is my pleasure to introduce our speaker today, Ursula Vangzanovich, Broker Account Manager at XM. Ursula has extensive experience with supporting U.S. exporters in logistics, international banking, export strategy, trade finance, and export compliance. And now on to the presentation. Ursula?
Hi, everybody. My name is Ursula Vangzanovich, as Eugene said, and it's my pleasure to be here with you today. I am looking forward to talking to you about XM Bank services today. I work in business development here at XM Bank, and I primarily work with our brokerage community. More on that later. Today, I have the pleasure of sharing with you information on some of the bank's most widely used services. I'll share some stories with you of current customers of ours, how they use our services to support their business, and I hope that this gives you some takeaways to apply to your business. So first, let's begin with why you should be exporting, if you're not already, and if you are, that's great. We hope that we convert you from responding simply to international orders to becoming more strategic in pursuing exports with our products in support of your sales. First of all, the number one reason, and hopefully compelling enough, is that 95% of your customers are outside of the United States. So this is a very compelling reason to consider exporting or adding a second, third, or fourth market. The other thing that we've learned over the years at XM Bank is that companies who export are more profitable. They build efficiencies while servicing customers around the world. And exporting not only smooths out seasonality for some of our customers, but for many of them, it smooths out the business cycle. Not all markets are humming at the same time. And you'll hear a little bit later about one of our customers who employed that strategy. So what are some of the myths that we hear from our customers all the time? and some that we look forward to busting for you today. First is the domestic market is good, so I don't need to export. This could be particularly appealing in times like today when the US market is growing. But just like our personal investments, we need diverse portfolios. In our businesses, we need diversity in our customer base. How about this one? My business is too small. Well, here to tell you that 42% of exporters have fewer than 19 employees. And we have many customers that are sole proprietors. Does this mean that they're doing it alone? No, of course not. They're surrounded by advisors, a team of folks, bankers, attorneys, accountants, and we hope that we become part of your advising team. Exports are too risky. What if I don't get paid? Well, this is one of our favorite myths to bust because this is what we do day in and day out. This is what we solve for. We assess risk. So we're going to look to see, does your prospective customer have the ability to pay you? If not, we're going to let you know and suggest that you get paid up front, or worst case scenario, even walk away from the deal. But if they are creditworthy, we don't want you to walk away from a sale or be too restrictive and potentially lose or reduce the sale. We'll support you by ensuring the risk, and if things go wrong, we'll pay you. This is really hard. Well, the first step is just to pick up the phone and call us. We actually answer our phones, and we have partners both in the public and the private sector that are willing to help, so give us a call. So who are we? For those of you who might not be familiar with Ex-Im Bank, we're a government agency based in DC that's been around for almost 90 years. Our sole purpose is to provide finance and insurance products to US-based companies to help them grow their international sales in order to employ more people here in the United States. While our main office is in Washington, I sit in Chicago and I have colleagues all around the United States. And in today's environment, we're just a Teams or a Zoom call away. Who is it that we support? All US-based businesses, whether foreign owned or US owned. Again, our interest is in supporting US jobs. And so we look for companies that are based here, producing product here, or servicing product from the United States. There's really no transaction that's too small or too large for us. The size of the transaction and whether or not we can support it is really going to be determined by the creditworthiness of your overseas customer. We work with small business, we work with medium business, and we work with large companies. But last year, almost 90% of our transactions was direct with small businesses. We're here to fulfill the private market where there are gaps from a financing and from an insurance standpoint. So what is it actually that we do? One, we increase your competitiveness. We're going to talk about ways to help you be more aggressive in your sales terms, to win more sales, and use us as a backup in case your customer isn't able to pay you. Do you need to access additional working capital for a new international purchase order? We've got you covered there as well with our working capital guarantee programs. And then any capital equipment manufacturers that are on the line today, if your customer is asking you for leasing terms, that just might be a hint that they're looking for ways to spread their payments in order to make that big purchase from you. We'll talk about ways that we can assist there. So what are some of the export challenges that we hear about day in and day out? Getting paid is definitely a big one. This can be challenging domestically, let alone internationally. So we're going to discuss today export credit insurance. It's a policy type that covers your foreign receivables that allows you to satisfy your customer's desire for credit and your desire to sleep at night. We have a multitude of choices. Only want to insure one customer? We can do that. Do you not want to take any foreign risk? We can help you there too. Sometimes we have run into companies who are in a cash crunch and they already have foreign accounts receivables and they're only looking to get insurance because they know that they get insurance on those receivables, or their bank has told them that now they'll have additional working capital because that foreign receivable that you insure, that becomes a piece of collateral that your bank can use. What if you need pre-export working capital? So not so much worried about the payment, but you've got this large purchase order and you need to borrow in order to fulfill that. We have a guarantee program that's going to allow you to purchase product, use the product to pay for raw materials, labor, overhead costs. Also, for any of you that make expensive capital equipment, again with long lead times, you may ask for a significant down payment from the buyer overseas. The buyer, who might be in the Philippines as an example, is thinking about the fact that they're going to send you $1 million in advance and not see your product for 6 months. They might be nervous about that and ask you for a bank guarantee in return. But now you turn to your bank and they take all $1 million away from you, and you can't use that for working capital purposes anymore. We'll talk about ways to reduce that collateral requirement. And again, as I mentioned, there might be capital equipment purchasers overseas and users who are looking for financing terms. So we'll talk about ways that we can assist in those situations. We like to divide up a transaction into two categories, pre-export and post-export. We'll first talk about the pre-export side, and then the majority of our products really have to do with the post-export, the receivable side, once you've invoiced your customer. On the working capital side, what we do is guarantee your bank to lend you additional monies to fulfill an international purchase order. Rarely do we do direct lending. We prefer to partner with the banking community. And as I mentioned, many US companies come to us to reduce the collateral requirements they have to issue a standby letter of credit for down payments that they're receiving. I should mention here that we have a 51% US content requirement. Again, because we're trying to support jobs here in the United States, we're looking to work with companies who do a majority of their manufacturing production in the United States, or that they're using US personnel in service transactions. So who is the Working Capital Guarantee Program for? It's really for any size company, but again, many of our customers are small businesses. We provide your bank a 90% principal and interest guarantee so that your bank now feels more comfortable extending a line, a brand new line, or increasing an existing line to support a new international purchase order. We can be set up as a transaction-specific loan, or most of the time we see the banks setting these up as revolving credits so that if you have other sales down the line, you don't have to start all over again. There really are no minimum or maximum amounts from our perspective, but it's always vested to your bank as well. The loan, the whole advantage of our guarantee is that collateral that you have, we're basically guaranteeing the bank, and the bank is now able to give you larger advances against the assets that you have, work in process, finished goods, accounts receivable. So basically, using the assets that you already have, with our guarantee, you'll get larger bang for your buck. The application fee is just $100, and the majority of these transactions are done directly by our delegated authority lenders. These are what we refer to as our preferred lenders. There's about 50 around the United States. We have a list of them on our website, and there's a good chance that your bank is one of our partners. And if you bank with a bank that isn't partnered with us, one, we'd love to talk to them, and still we can work directly with you. So there's always a way for us to help. Let's take a look at a customer of ours that utilized us for this particular situation. Sutphin is a Dublin, Ohio-based family-owned business that's been around since 1890. They're a manufacturer of fire apparatus like trucks. They manufacture a full line of emergency response vehicles. They are a great example of why you should export, because markets ebb and flow. And when the Great Recession took hold here in the United States, POs for Sutphin dropped by 50%. Sutphin had to look outside the United States to keep sales going. They worked with our state partner, the Ohio Department of Development, to access grant money that was awarded by the Small Business Administration. They used that money to find new customers using the commercial service as well as the Ohio Department of Development. China became their biggest market. Was it challenging for Sutphin? Yes, it was, but they overcame those challenges by using various tools, the state agencies, the federal, as well as us. We supported them with our working capital guarantee program that allowed them to secure financing from their lender for their new overseas sales. Sutphin used the loan proceeds to pay for labor, materials to fulfill these new orders. And on top of that, they used our credit insurance to protect themselves against non-payment. That helped boost their confidence in exporting and take on new transactions. Here's another great American company, Zeeco, based in Oklahoma. They're a manufacturer of combustion equipment in the petroleum industry. Zeeco's transactions run anywhere from $500,000 to the tens of millions, and they build equipment, and that could take anywhere from 6 months to 2 years. Like many capital equipment manufacturers, Zeeco requires a significant down payment from their buyer. Why? Well, they want their buyer to have some skin in the game and not cancel an order, rightly so, especially in any type of customs situation. But of course, the foreign buyer then might feel uncomfortable sending a large down payment, especially if it's a first-time relationship. And so they will ask for a bank guarantee or some type of performance bond to protect themselves. They want to make sure that in 6 months or 2 years, they're going to receive the combustion equipment or they're going to get their money back. Zeeco could go to their bank to have a standby letter of credit issued in favor of the buyer. That's the name of a bank guarantee here in the United States. It's just basically a standby LC. But then Zeeco has to turn over, let's say it was $1 million deposit, they have to turn over all $1 million because the bank has got to collateralize it, or the bank is going to take $1 million off their line of credit. With us having a working capital guarantee in place, only 25% of that standby has to be collateralized. So that's a huge benefit to a company like Zeeco because one, they're able to keep 75% of their deposit and actually use that money to fund their working capital needs, which is a lot less expensive. And they can pursue other deals concurrently because they have the financing support. So now, if you can picture that boat that we had, we went from the left side of the transaction pre-export. Now we're going to talk about post-export. What are the different payment terms that you can offer to your customers? Each of them have an element of risk. Open account terms, from your perspective, now you're taking all the risk and your buyer is in a good position. On the flip side, if you're asking for cash in advance, your buyer's got all of the risk. Letters of credit are somewhere in between and appropriate tools for custom equipment manufacturers for difficult markets. But if you're trying to build a relationship with a distributor dealer, that can be expensive, difficult, and clunky. So we're going to focus now about using credit insurance along with open account terms. What is credit insurance? It's a type of policy to insure your receivables. In the private market, you can insure domestic receivables as well as foreign. Here at Ex-Im Bank, we focus on the foreign because, again, we're trying to support U.S. exports to build jobs here in the United States. What does credit insurance do? One, we hope you use it as a sales tool. It gives you the ability to offer credit terms. When you meet with a new buyer, we never want you to say no to a credit. We want you at least to say maybe. Let's check them out, see if they're creditworthy before you turn them down. Secondly, it's sleep insurance. If you do give credit, you never know what's going to happen, and you have us as a backup in case your customer isn't able to pay. And for those of you who maybe already have established distributor relationships or customers overseas that you're giving credit to, oftentimes putting insurance on those existing receivables gives you additional collateral that you can pledge to your bank and borrow more money if you're in need of working capital. So what are the risks that are covered by credit insurance? Two basic risks, political risk and commercial risk. Political risk is really any action on the part of the foreign government that would prevent your customer from paying you, whether that's war, insurrection, arbitrary cancellation of an import license, maybe your customer can't convert local currency to US dollars in order to pay you back. Any of those things are considered to be political risks. Commercial risks on the other side, and that's a majority of the concern most of our customers have, and the majority of our claim filing, is your customer's inability to pay you. Could be bankruptcy or insolvency, could just be slow pay, maybe cash flow problems that they ran into. Maybe you sold to a distributor and that distributor resold to an end user. If their end user didn't pay them, they may not be in a position to pay you. It's often a domino effect. We'll talk now about a few of the policy options. We don't have time to go over everything today. So our Cadillac policy is our small business policy. This is a policy that is only available to small businesses, but we have a version that's available to any size company that we just call a standard policy. In this case, this is for a company that doesn't want to take any foreign risk. Essentially, you're insuring all of your foreign receivables with us. And because you're giving us all those foreign sales, we're giving you maximum coverage, 95% cover against commercial and political risks, no deductible. The cost varies by the payment terms. So for example, if you give net 60-day terms to a buyer in Mexico for a $10,000 shipment, it'll cost you $55 to insure that shipment. We'll talk about another example soon. Just like our working capital guarantee program, here we require the product or the service to be at least 51% US content. For some companies who have a little bit of foreign credit experience, we may actually give you what we call our golden pen. We let you make some credit decisions using our standards. This just helps speed underwriting time. If you don't have experience though, that's okay. We'll help you make those decisions on buyer creditworthiness. And then for some companies, they consider Canadian receivables to be almost like their domestic receivables. So if that's something that you want to exclude, we can do that. Here's a customer of ours that currently uses our small business policy. Koval Distillery is a woman, actually family-owned business in Chicago that was started in 2008. It was actually the first company in Chicago to open a distillery since the mid-1800s. Today, Koval has spawned a whole new industry in Chicago, and they're located what we call Malt Row. Come and visit it sometime. Sonat, pictured here, and her husband, Robert, decided to pursue international from the get-go. They first started with Europe and grew from there. This is another great example of a company that used state and federal resources to help them, as well as their trade association as they started to pursue international business. They used the US Commercial Service to help them find distributors, as well as working with the state of Illinois. They were introduced to us and started to use our small business policy. Before they met us, they had their distributors prepaid for their shipments, but that limits sales. Today, they're in the position to offer credit to new buyers, and from the get-go, they are proactive about discussing terms. Sonat told a story that one of her Australian distributors was a little slow in payment. So she called them up and reminded them that if they weren't going to be paying in a timely manner, she would have to report them to us. Let me tell you, her invoice got paid quickly. It was a win-win because we didn't have to deal with any claims and she got her money. That brings me to, does your foreign customer need to know that you're using credit insurance? That's really your decision. Some companies like Koval are upfront with their buyers and disclose to them that they're using Ex-Im Bank. Others keep it quiet. It's your choice. At the end of the day, we're not going to be contacting your customer until and unless you file a claim. Let's move on to another type of policy that we offer. This is what we call a multi-buyer select risk policy. So what Sonat has at Koval is a multi-buyer policy, but she insures all of her international sales. We run into companies who don't want to insure all of their international sales, and we give them the ability to carve out who they don't want in the policy and leave in just who they're feeling more worried about. Because those companies aren't giving us the whole spread of risk, we ask them to share a little bit more in the risk. And so in these cases, companies have first loss deductibles. Still, the advantage is these companies can pay for their premiums once shipments have occurred. So just like our small business policy, and I should have mentioned, with our multi-buyer policy, a company who might be invoicing and shipping in September doesn't report and pay premium to us until October. We allow you to close out the month and then report sales. This is hugely advantageous because you're not paying for premium on something that you don't know occurred. A sales actually happened, and that's when you paid for it. Again, depending on your company's experience, we might give you some authority to approve buyers. Otherwise, we'll work with you to get them approved for credit. So here's an example of a company that uses our select risk policy. This Wisconsin manufacturer of electronic devices that goes on all kinds of vehicles, sold here in the United States to household names like Caterpillar. And as those companies went overseas, they took this Wisconsin supplier with them. The Wisconsin company continued to give open credit terms to their effectively US customers, but they were invoicing foreign. And so technically they did have foreign receivables, but they felt comfortable with those customers. They thought they'd have leverage back here in the United States. As they went abroad and saw that there were more opportunities to sell, they wanted to be in a position to offer credit, but they were nervous about offering it to companies who weren't household names, weren't easily recognizable. And so they came to us for this select risk policy and essentially gave us the names of the buyers they currently did business with that they were comfortable with from a credit standpoint, and separately told us, here are the new ones that we would like to insure. Because we're not insuring everything, again, we're asking the company to share a little bit more in the risk. So in the case of this Wisconsin manufacturer, they had an $8,000 first loss deductible. So let's say they had a $100,000 sale. The sale would cost them 60 basis points to insure, or $600. If there was a loss, we would first subtract off the deductible of $8,000 and pay 95% of the $92,000, or about $87,500. Not quite the same as the Coval policy. In that case, we would pay 95% of 100,000 or 95,000. But the advantage here again is that the company is choosing to exclude some of their better known customers. Let's move on to our single buyer policy. This has been a real hit over the last year. Many companies have come to us over the last year who maybe use private credit insurance, but as things became tight around the world, some of those buyers weren't able to be covered. And so they supplement their private credit insurance policies coming to us to cover buyers under our single buyer policy. Just like it sounds, it's one policy for one buyer, whether it's a single shipment or a series of shipments over the course of the year, we can cover that. The rates are all over the map, just like your customer, but the convenience is that we have all of our rates available on our website. I have a link here, but contact us anytime and we can walk you through how to figure out what the cost is. And the sooner you can figure out the cost and the sooner you can talk to us, you could potentially pass on the cost of insurance to your customer. Here we do have a minimum premium, $500 for small business, $2,500 for large. But it's very reasonable, and customers who are able to use the policy actively potentially get a refund at the end of the year of that initial deposit. Let's look at another company that used this type of a policy. Hayes Manufacturing is a family-owned business up in northern Michigan, woman-run today. They're a manufacturer of couplings, and about 5 years ago in 2016, they really wanted to diversify across markets, specifically international markets. They were letting their competition have all the sales outside the United States, and they wanted to get in on the sales. They found an Indian distributor dealer who they were selling to on prepaid terms. The Indian distributor complained that it was really difficult to purchase from them because they had to give terms to their end users that they were selling couplings to. Eventually, reluctantly, Hayes came to us and said, okay, we'll give this insurance thing a shot. We were able to get them a single buyer policy, getting the buyer in India approved for a $50,000 limit. How did we do that? We asked the Indian customer, or actually Hayes did, to provide us references. Did other vendors provide this Indian distributor open account terms? As it turned out, they did. They were European-based vendors, but we were okay with that. We had one European vendor who gave $25,000 of credit to this Indian distributor. Based on that, we were comfortable extending $50,000. This worked so well that after just a couple of months, Hayes decided, you know what? We're going to insure all receivables. We're going to start putting this in place. And they moved on to one of our multi-buyer policies. Today, for 2021, they expect export sales to be $1 million. Given that it was so little just 5 years ago, this is great growth. They've established exclusive distributors today in India, Brazil, the UK, and China. We're super proud of them. Here's one more example of a short-term policy. And I should have mentioned at the beginning that short-term to us means terms of less than a year. Most of the time we're talking 60, 90 days, but occasionally it can go up to a year. Many companies use letters of credit for a variety of reasons. Perhaps they make custom equipment, and that would be a smart choice. Essentially, you want the buyer to open up a letter of credit in your favor the moment the PO comes in. Letters of credit are essentially you, as the seller, transferring the risk from the buyer, say in Indonesia, to the Indonesian bank who's now opening up the letter of credit in your favor. Maybe you're comfortable with the Indonesian bank, but if you're not, you have a couple of choices. You can go to your commercial bank and ask them for a confirmation of that letter of credit. That could cost usually around 2%, varying depending on what type of LC and exactly what market. Or you could come to us and insure that letter of credit. It's not exactly an apples to apples comparison because the confirmation is for 100% and our insurance is for 90%. However, our insurance is significantly less expensive. So in some cases, companies are comfortable doing that. Let's look at an example. We have a customer down in Florida that is a manufacturer of oxygen therapy chamber systems. They had a $115,000 sale to a Lebanese buyer. They were looking at using letters of credit. They didn't want to pay the confirmation fees and instead came to us and insured that letter of credit for $184. That's a lot better than paying a couple of $1,000s for a confirmation. Again, it's not an apples to apples comparison because we're not providing 100% cover, but that's something that the exporter understood. So let's talk really quickly about how is it that we make credit decisions on buyers. We're transparent. We publish our short-term credit standards on our website, and we promote this through our brokerage community, which we'll talk about a little bit later. The reason that we make this public is because, again, we want you in the position of saying maybe when a foreign buyer asks for credit. We'd like you to say to that foreign buyer, fill out a credit application. Your company probably has a domestic credit application. Your international credit application probably isn't going to look all that much different. Good idea to ask for 3 to 4 references of other vendors that currently give credit. We can give you a sample trade reference form that you would send to the other vendor to see how is it that the buyer pays and give you a sense of whether or not they're creditworthy. For us, just like we talked about with Hayes, we were able to approve their Indian customer for up to $50,000 of credit based on a European vendor who gave $25,000. Do you have a reference from a Kentucky company that sells to your buyer, giving them $50,000 of credit? We take a look at that and give your buyer $100,000 of credit. Do you need to go higher than that? Well, with each step higher, so over 100, but less than 500, we'll want an additional piece of information. Still give us the reference, but we'll also want a third-party credit report. We're just going to make sure that there are no suits, liens, and judgments and look for some information on the foreign buyer. It's not until you're over $500,000 of credit do we start to ask for the buyer's financial statements. And it's not until it's $1 million or more that we ask for audited. We do take other languages. Check with us first. It does depend on our staff's ability. So just like I mentioned in the beginning of my introduction, I work with our brokerage community. Brokers are third-party providers of credit insurance services. So essentially, this is not your property and casualty broker that helps you get business owners property insurance or keyman insurance. These are specialized brokers and specifically in trade and political risk. We have a number of them that we work with Ex-Im Bank as well as with the private market. This is advantageous to you because as your exports grow, eventually you may graduate out of Ex-Im Bank, and that's our goal. Our goal is to see you grow to such a point that maybe working with a private company is going to be more competitive. We're here to help you grow. What does the broker do? They're going to help you get the application process going. They're going to explain the policy terms. They're going to help you understand what is it that you need for claim filing. Every good broker should start a conversation assuming that you're going to have a claim at one point in time and making sure that you understand what are the documents that you need to have on hand so that you can perfect a claim with us. We want to pay your claims, and that's the broker's role to help you guide you through that claims process. If you contact us, we'll hook you up with a broker. Let's move on to capital equipment financing. So now we're not talking short term, we're talking in EXIM's vernacular medium term. So this is over a year up to 5 years. And this is reserved essentially for end users purchasing US capital equipment, so foreign end users. So again, like I mentioned at the beginning, if any capital equipment manufacturers are on the line, and if you've had foreign end users inquire about leasing terms, something along those lines, likely they're looking for ways to spread their payment. Maybe they're in a high inflationary market and they can't get access to the type of financing that you can help them access here in the United States. Here, what we do is issue either an insurance or a guarantee. Your bank ultimately is going to decide, because again, we're not doing direct lending most of the time. We're getting a bank involved to extend a loan to your foreign customer, except the benefit to the bank is that we're going to take 100% of the risk. Now, we do want your foreign customer to have some skin in the game, so we're going to ask them to make you a 15% down payment. After that, we're going to guarantee or insure the balance. So let's say it's $1 million transaction. The buyer gives you $150,000 down. We basically are looking at insuring or financing $850,000. Of that $850,000, all of it has to be US content. When we talked about short term, we talked about the fact that we only need 51% US content, and these longer transactions, we really can only support the US portion of the sale. The benefit to you as the exporter is that you're paid out at time of shipment. And here's another tip. You want to control your shipment. We could talk about that at another time in person over the phone, but it's really important that you control the shipment, because one of the documents your bank is going to ask for is a shipping document in order for them to pay you out, because the bank is going to need that in time of claim filing. The benefit to your importer is that they get to actually purchase the equipment, put it into use, potentially generate some cash flow before their first payment is even due. Typically, the loan is set up with semi-annual payments, 6-month grace period, 10 equals installments paid off in 5 years. Long-term financing is very similar to our medium-term financing. It's just typically reserved for deals over 10 million, and transactions are typically financed for a period of 7 years or more. The structure is the same though, 15% down, and we can cover the balance. Here, again, most of the time we have a bank who's actually extending the loan, and we're providing them a guarantee on that loan. On occasion, we do direct loans. EXIM Bank is open around the world. We publish where we're open for business on our website, which typically is updated a couple times a year, but sometimes events require us to update more frequently. Most recently, we updated our what we call country limitation schedule on July 1. So check it out. If you click on our link and you go to country limitation schedule, you just pick a country from the drop-down box. And if there's a Y, that means yes, we're open for business. You're going to look for short-term or medium-term. If you need help explaining how to read that country limitation schedule, please contact us. We are located near you. And as I mentioned in the beginning, we're just a Teams, a Zoom, or mobile phone call away. Thank you for joining us today. And we're going to move on to the Q&A portion now.